CFTC considers spot crypto trading on futures exchanges. What it means for Bitcoin, Ethereum. Breaking news. The CFTC is considering a groundbreaking move that could reshape how crypto assets are traded on futures platforms. In a bold new initiative, the Commodity Futures Trading Commission is exploring ways to permit registered futures exchanges to expand their offerings by including leveraged digital assets such as Bitcoin and Ether. Acting Chairman Caroline Pham explained in a recent press release that there is an immediately implementable and straightforward solution to this issue. Referencing her March op-ed, she proposed that the CFTC could utilize exploring new coins in the crypto reserve. Eggcoin, Scamcoin. Get ready for a crypto revolution. We're talking about more than just Bitcoin here. The future of digital currencies is about to get a whole lot more interesting. Liana Fink, a renowned cartoonist and illustrator, brings us an exciting update from the world of cryptocurrency. In a recent announcement, Trump revealed plans to establish a strategic crypto reserve for the U.S., and it's not just Bitcoin that's on the menu. But here's where it gets controversial. While Bitcoin has been the flagship cryptocurrency, Trump's decision to include other digital currencies in the reserve has sparked debates. Some argue that this move could diversify the nation's crypto holdings, while others question the legitimacy and stability of these new coins. Let's dive into the world of Eggcoin and Scamcoin. Eggcoin, a relatively new player in the crypto market, has gained attention for its impressive value and potential. On the other hand, Scamcoin, despite its name, is not a scam, but a legitimate digital currency with its own unique features. And this is the part most people miss. The inclusion of these coins in the strategic reserve highlights the evolving nature of the crypto landscape. It's a reminder that the world of digital currencies is dynamic and ever-changing, with new players constantly entering the market. So, what do you think? Is this a smart move by the U.S. government? Or are there potential risks associated with these new coins? Feel free to share your thoughts and opinions in the comments below. Let's spark a discussion and explore the pros and cons of this crypto reserve expansion. CFTC proposes allowing spot crypto trading on regulated exchanges. Public feedback needed. Imagine a world where cryptocurrency trading is as regulated and secure as traditional futures markets. The Commodity Futures Trading Commission, CFTC, is taking the first step towards that vision, but the path is fraught with controversy. Hey there, have you ever wondered how the world of cryptocurrency could be regulated? Well, the CFTC has a plan that could change everything. Acting Chair Caroline Pham is proposing that federally regulated futures exchanges be allowed to host spot crypto trading. It's a bold move that could make the U.S. the crypto capital of the world, but here's where it gets controversial. Pham, the acting chair of the CFTC, announced this initiative on Monday, calling it the agency's first step in a broader effort to establish federal guidance on digital assets. The plan is simple in concept. Allow designated contract markets, DCMs, which are CFTC-registered exchanges, to list physically settled crypto contracts using existing legal authority. Pham is confident that current rules under the Commodity Exchange Act are sufficient to proceed. There is a clear and simple solution the CFTC can implement now, Pham said in a statement. She's inviting stakeholders to submit feedback by August 18th. And this is the part most people miss. Pham is not proposing to adopt complex EU-style regulations like MiCA. Instead, she wants to leverage existing CFTC frameworks to regulate spot crypto markets within the next 12 to 18 months. A DCM, or Designated Contract Market, is a CFTC-registered exchange that lists futures and options. Think of the CME Group or ICE Futures US. These venues follow strict federal rules on market integrity, surveillance, and customer protections. The CFTC wants to know how spot crypto contracts should be structured on these DCMs, including whether additional safeguards are needed and how potential conflicts with securities laws might be addressed. But not everyone is on board with Pham's plan. Legal experts, like Andrew Rosso, a public affairs attorney and CEO of AR Media Consulting, are raising concerns. Rosso warns that the proposal could create inherent legal instability. He points out that the CFTC's initiative assumes it can proceed with listing crypto assets as commodities, but that directly conflicts with the SEC's position that many of these same assets qualify as securities under the Howey test. The static nature of initial regulatory classification cannot accommodate this dynamic reality, Rosso said. He warns that market participants could face real legal risks, even if they comply with CFTC rules in good faith. So what do you think? Is Pham's plan the key to unlocking the full potential of cryptocurrency in the US, or is it a recipe for regulatory chaos? Share your thoughts in the comments below.